Good morning, everybody. Happy Wednesday. Welcome to the live stream. My name is Jacob Gabbard from Invest with Jacob. We do our live trades every Wednesday at 9 a.m. And if you've been following our closing calls, we've been all over the price action and what we're looking for and the levels that we're looking for and how to trade the levels and all those types of things. Yesterday we talked about, we talked last week about them coming up to 7,800, which they did. They actually pushed through it and then gave a failed breakdown of this breakout, which pushes them to the bottom of the range. I said they would very likely come back and test this high right here, which they have done. We would very likely get a bounce off that high, which they have done. And now the real question is going to be, how do they react off of this breakdown ledge? So far they are the 7750 area. They're rejecting it. They got through 77.25, 77.50 was the next level up here. And what happens next is really important, because if they come back down and break this low that they made today, then they're very likely going to come down. They may bounce again off the 21, but quite frankly, NQ bounced off that. We talked about that yesterday. The NQ was at its 21 yesterday, so we would likely see some kind of bounce today. So they got down and tested the 21. If they come down and break this low, I suspect you may see like a little back test like this, but they will probably come down and break through. If they break through that, they have some support at 76.20, although I don't think that support is going to hold. And then if they break through 76.20, it's off to the races to the downside, coming back to test the bottom of the range down here at 73.28. So if you want to know why they come down, or the mechanics of this, you can check yesterday's closing video. I go over, this is exactly a mini version of what you would expect should they break down here. So if you just took this area here and shrunk it down, it becomes this area here. It's basically the same thing. It's not the exact same structure, but pretty close. And what you have is you have a breakout of that structure. So that's this leg up as your breakout. And then when they broke out, they broke back down to the high, which is right here. And that's what they're doing now. They're breaking down to the high. They failed that high. And as soon as they failed that high, it became very likely that they were going to come all the way down to the bottom of the structure, and very quickly usually. So you saw it happen in just a couple of days, and they actually went through the bottom of the structure, which is a warning sign to the bulls. So that's kind of what we're looking at in the big picture. We are going to do hopefully some trading today. We've had the Wednesday curse for quite a while, where we either don't get any trades or it's choppy and the trades aren't very good. It's just part of trading, but Wednesdays have been really bad trading days for many months, and it's kind of annoying. But that's the way it goes in trading. Sometimes you have weeks where you don't lose a trade. Sometimes you have not weeks where you lose every trade, but it all evens out. It all comes down to mean reversion, and there are probabilities for a reason, right? The casinos get a 3% edge on a slot machine, let's say. Well, one pull of the slot machine is going to take 100% of your money, but the next pull may give you 200 times your money. So they won $5, then gave you, $1,000. So they're negative $9.95 on that deal. However, over time, if you keep playing that slot machine, you are going to lose money. You will give it all back and then some. So the whole idea of trading isn't to win every trade. That's an impossibility. No one could do that. It is to understand what the probabilities are of good setups. Understand that, hey, if I hit 65% of these trades and I'm making 2-to-1 on the trade, I'm going to be making money. That is printing money, as they say in the business. So understanding the probabilities and where good trades are is far more important than winning trades. Winning trades will come. That will happen. And that's why bankroll or capital management is so important. Everybody wants to get rich today. Everybody wants to put all their money down on a trade and hope it goes their way and double their money in a minute. That can happen. Like I said, you can put $5 into a slot machine and get $2,000 back. But if you keep doing that, you're going to lose money. And not only are you going to lose money, you're going to lose all your money. Because you're putting all your money in on a trade. You get very emotional about it. It's way too stressful. And you're just going to lose trades. That's just part of trading. So if we lose today, we lose today. That's part of it. We win over time. We have proven that over and over and over again. So big day, decision day here kind of for the market. We're going to be watching SMH. We're going to be watching the yields and of course NQ, and the Mag 7 will kind of tell us what's going on in the pre-market here. SMH is up 1.25%. So after a big move back down to support yesterday, they're reclaiming that support, which is super common. First time into a support zone, you claim it, you bounce back above it. But knowing where those support zones are is really important, although this one's down a little bit. It's actually right there. NVIDIA is up about 0.81%. Meta is up about 0.25%. Microsoft is down 0.5%. Netflix is flat. Amazon is up about 0.75%. Tesla is up. Apple is up. Google is down about 0.5%. Just out of curiosity, gold. Nice bounce here out of gold, silver, Bitcoin. Okay. Yeah, so all of these things, by the way, if you're in my room, are things we've talked about and are looking for. So not anything shocking today. The 30 years down a little bit, but still at 5.2, still maintaining a very, very strong position over 5%, which is not good for the markets, but this is good. They will be happy to see it's down almost 2% today, but still not in a good place on the yields. So if it stays as it stands, where we're up 30 and up 120, and the Mag 7 and SMH is green, you could have a very green day on the markets. Because there's essentially only two things that can happen from here. So let's go back to the ES. They broke out. They're back testing the prior high. This is 100% normal. Markets are going to do this 99% of the time. They're maybe not directly. In other words, they can break out. Oh, they can give me my drawing tool. They can break out, pull back, break back over this high, and they can run for a long time. And then maybe a couple months later, they're going to come back and test this area. Or they can do it like they did here. They break out immediately and come back and retest immediately. So they don't have to do it right away, but they will do it. They will come back and test that zone. So if they're going to come back and test this zone and hold, and they get back above 7780, this ledge right here, that's going to be very powerful for the bulls. They're going to be looking to push, and then we're going to be looking at it probably, assuming they can go ahead and take out the high, they're going to be looking at 8,000 overall, where this is your wave 5 going up. This is 3 of 5, or likely 3 of 3 of 5. This is 4 of 3. You would look for 5 of 3 up towards 7,900, back test this high, and then 8,000 after that. That would be your typical structure here. The other option is they fail and they start to break down. And if they break down below the 21 and into this range, again, 7620 could hold, could produce a bounce. But I think even if they do bounce, I think it's more likely to look like this, where they backtest the breakdown, and we're likely to come down here. Those are the two outcomes that can happen. So today's kind of an interesting moving day. It's green. We expected a bounce, especially when you see the NASDAQ. You'll know why we expected a bounce. They bounced off the exact level we expected them to bounce off of. So if you know these things and you're looking for these things and you're looking for these setups, they're great trading opportunities. On the NASDAQ, we have the daily 21. So yesterday at the close, I said they came right into the daily 21. They're very likely to bounce this on the first retest of it. It's very hard for them to break down below the 8 and the 21 in one shot without bouncing. Since they broke through the 8 and came to the 21, they're likely to bounce. Now, my point yesterday was they could bounce the 8 or the 21 back into the 8. The 8's going to be strong resistance here at 29,780, and then fail back down. That could definitely happen. But we talked about 30,000. They hit 30,000 on the nose. They pulled back. They went above it. They failed the back test. And this is the one that's a little more interesting because they've already failed the back test of a lower high. So if they accelerate down below 29,245, they will be coming back down here. If they come back and take this out, this 30,000 level goes down again, then very likely we're on our way to a new high on the NASDAQ in the 32,000 range. Now, there is one caveat to that, but we've already seen it, so we'll see how this plays out exactly. NASDAQ is very famous for very deep retraces. You can see it right here. They make a high, they give you the first move down, they make it look like they're going to make an all-time high right here, and then they fail lower. Very famous for that. If you look at 2022 on the NASDAQ, in fact, we can just do it. I'm on the NASDAQ chart. Very simple to do. You'll see this exact same thing play out, only it's a huge, huge failure. So the NASDAQ doesn't respect the 618 and 764 as much as other charts do. Tech is very weird in that way. We want 2022, which is way over here. I went way too far. Way too far. 2022, right here. So you'll see here that before the really big drop, the NASDAQ made its all-time high, pulled back, came up, failed, made an equal low, and then came up within just a few points of the all-time high. I mean, it was a big retrace, and then off it went. So NASDAQ's very famous for deep retrace. You can see it again on the way down, right? This is not a lower low. It's an equal, it might be a stab lower low. This might be a slightly lower low. But if you look at the NASDAQ overall, its retraces are deep. Like off of this low, you get a bounce, and then the retrace is almost a new low. So it does it all the time. It's a very common occurrence. Over here, they make their first pullback. They come all the way back up like they're going to make a new high, and then they fail off of it. So on the NASDAQ, I would caution against it being a foregone conclusion that once they break back over 30,000, we're going to a new high. They still have to confirm they're going to get out. And there's a lot of resistance right here, but they've already done the deep retrace here. So I would assume, which makes an ass out of you and me, that if they get back up here, they're going to probably pull back off of it again, but get through. So we've already had the deep retrace. The question is, are they now going to fail off of this bounce here or rip it back in the upward direction? But the NASDAQ's the one chart that, that's not the one chart, but the one main chart that I follow that gives you those deep retraces that are very trappy, very, very trappy. And they're very nasty when they fail. Morning, George. Welcome to the stream. I'd be interested in your opinion on the recent BOJ and U.S. intervention in the dollar-yen carry trade, its impact on the dollar, gold, and markets. Perhaps you can share your thoughts. I'm not going to have many thoughts on it, George. I'll be very honest. So let me give you some of my background. My background is in chart expertise. In other words, I don't care about the news. I don't care what the Bank of Japan's doing in the U.S. I don't care about the yen carry trade. I think it's all nonsense. But, and that's a big but, I will not lie. You other brothers can't. All right. Those are macro things. Macro things are important to the market. All of that stuff, don't get me wrong, it's important to the market. It's not important today, and it's not important tomorrow. It's important when the market decides it's important. It's always going to be important at a key level. And that's what I'm interested in, is just watching the key levels and where we're at and what we're looking for. So all of that stuff, I am not an economics genius, although I think a third grader understood inflation was coming after 2020, even though Powell had no clue apparently. I am not an economics genius as far as how that all works in the background and who it's affecting and how, as far as the macro stuff, that is not my forte. My forte is reading charts and understanding Elliott wave theory, understanding price action in a very strong way, and trading that. So I don't want to give you information that I would call amateur or Dunning-Kruger or isn't at a level that I would feel comfortable giving it out, because it would just be me talking out my butt essentially. So I'm never afraid to say I don't know. I don't know. Um, I can tell you that if I go back and I look at the yen carry trade and how it affected the market in history, sometimes the market rallies really hard on the negative news. Sometimes the market goes down on the negative news. And because it went down really hard a couple years ago, or maybe last year, I forget when it was, everybody says, oh, the yen carry trade's important now. No, it isn't, because it doesn't do the same thing every time. So if it doesn't do the same thing every time, then it's not important to the market. It's just a catalyst that allows the price action at the level to do what it's already going to do. All the institutions care about is their ability to be liquid, get in and out of trades, and buy the areas that they deem important. And they can rally, and it's why the saying goes, the market can stay irrational longer than you can stay solvent, because you read the news and then you look at the market and you go, we got two wars going on. Russia and Ukraine are still fighting. Iran and America are fighting. Oil is going up at the speed of light. The 30-year is over 5%. It has been for a long time. We are seeing all kinds of banks going out of business or having debt carried. We're seeing the major black market lenders deny equity to their people. They have liquidity problems. We are seeing housing go into a place where housing shouldn't be, where housing is going to start to go down. We have way, way, way more sellers than buyers. We are seeing debt get out of control. We are seeing all of these things happen, and the market's at all-time highs, essentially. So the market doesn't care about that. It cares about their liquidity. It cares about stability. They do care about stability, and I think that they have the biggest reason we are sideways right now is the new Fed chair. He is not as open as Powell. Powell said everything up front before the meeting. You were very, very confident that the Fed was going to do what you thought it was going to do at the Fed meeting. They were going to either hold rates, raise rates, or cut rates. Whatever they were going to do, you were very confident because Powell gave it away. This guy is not giving anything away, and they don't like how he talks, and it makes them uncomfortable, and you're starting to see the market go sideways. That's indecision in the market. And they'll keep their key levels. They'll say, hey, we'll continue to maintain these levels until we're unhappy, and then when those levels break, all hell breaks loose in one direction or the other. So I don't want to give you bad information. That's a long answer to tell you I don't know. Morning, Sunny. JG, today's move driven by MRVL, MRNA, and SKHY. I'll have to see who those are. I don't know all the stock. Marvel Technology. Okay, I'm assuming they are. If they're a tech company, I'm guessing they're in the semiconductor space or some way tied to that. I don't know what they do. mRNA is Moderna, right? Moderna, yeah. Moderna, yeah. Moderna's not really big enough to move the market. Oh, and Sky Hynix, they've been up and down too. But if you look, this is the kind of thing you're expecting. The Kospi, when you see the bubble break, this is how it looks. And then you get a dead cat, and then they're back down. Now, this doesn't mean that they are going to a new low here, by the way. This is a huge supply area they came into. Huge. And they bounced really strongly off of it. You can absolutely see them come higher. This would not be shocking whatsoever to see that and then down. But this is the kind of selling you're looking for when you're looking for the market to break. But I don't know that any given day we're going to go up, move. The market's going to move. But if it's not breaking through key areas, then it's expected bounces, expected sells until we get, out of the major range that we just built. All right, so that is our overview of the markets. GC, I was expecting a big bounce. If you've been following me in my room, let me see GC real quick. Yeah. Um, gold, I use GLD, I don't use GC, but gold came down just like the Kospi came down to a major supply zone. And, it took them a while to get off the mat here, but they built a lot of structure. We were looking for this to be A and then a B back up towards here. I've been talking about that for a very long time. And I don't think that this gold bounce should be shocking to anyone or news related. It's structurally related. They come down to a very important point, huge level, and they bounce it. When people say you can't predict the market, they're right. I don't know what the market's going to do tomorrow or the next day, but I have a really good idea of what it's going to do here. And that idea is it's very likely to bounce. However, I'm not just going to blindly get long here, right? I'm going to wait and see that we have acceptance, and then I can take the trade, because once they bounce, we know I have a really good idea of where they're headed. And that's why the markets are so important and structure is so important, is because that's where the buyers and sellers are. That's where the institutions are. And if you don't know who's moving the markets, the institutions. And when they need liquidity, they sell really hard so that they create buyers that they can sell into, because we got time. What time is it? 9:24. We only got about 4 minutes. Real quick. When the market goes up, it goes up to a point that there's not going to be anybody that wants to buy it. It's too high. It's not a great place to buy. Everybody's waiting for the pullback to buy. So if institutions bought here and they want to add to their position, they want to create buyers. So what do? They sell some of their position enough to move the market, because there's no sellers up here either. Nobody wants to sell up here because they've all gotten run over on the huge move up. So they sell really hard and push the market down, which creates buyers. Then they bounce it, and then they sell into them again, trap all of those buyers. Those buyers have to turn around and sell, and they know where the buyers are going to sell. They know where they put their stops, because we're a herd. We are all trained the same way in the market mentally, because we all read the same books, we all watch the same TV, we all listen to the same idiots. And so they know exactly what you're thinking. They've created that. They've pushed you into a herd mentality. Then they get you to the point where they can buy into all the people who have to sell out of their long position, because all the longs got eviscerated. They create another entry down in the price zone that they want, and all of the people are happy to dump their shares because they got killed here. And as soon as they dump their shares, the market does this, which is why you hear everybody said, they knew I was going to sell, and then they took the market up. You're exactly right. That's exactly right. They knew you were going to sell, and they took the market up. They took advantage of you because you panicked. You panicked on the way down, you panicked on the way up, and they smoked you in both directions. But if you know that, and you know where they do it and how they do it, you are an institution, just without the money. That's how you beat the market in a regular way. Okay, let's get over to the indicators, because we got to go quick now. Wrong page. No, is that the right page? Yeah, that's the right page. Sorry. I just got to double it up. Oh, I didn't want to double it like that necessarily. Is it this one? No, it's this one. Yes, it's this one. I just don't have the right indicator over here. So let's change this to the 5-minute SPY. And we are going to get Pivot Point Pro on here. Sorry, guys, 1 second. Which one is it? I never know. I should get some of these off of here. I think it's that one. Yeah, okay. Okay, this is not on the right chart. Oops, that's not what I wanted. Sorry, guys, I don't know why this wasn't up. That's my fault. Will asked if we're looking for a call or a put at the open. Will, we are up 36 points going into the day. We are never going to be looking for a sell when that's the, well, or a buy, excuse me, when that's the case. That's not exactly true, but generally true. We're not going to buy into the top of the market. But we could be looking for a sell. I gotta get ready for that. That first part of the day went quick. Let's go here. Um, we uh, we could be looking for a sell. The problem you have is from 8:30 until 8:50. So in 20 minutes, they had a 40-point run up. That's extremely strong, which tells the indicator the bulls are really trying to create a trend type of day. So sells can get muted because they're likely to fail. However, I would look for the market to sell a little bit here. You to gain some equilibrium. Um, where is my key? What chart am I on? I'm very confused. But I'm on. Hold on a second. I might have it right here. Is this the one? I have too many things. Maybe on the wrong. That's version 3, though. That's all right. We can use it. There, okay. Okay. That's better. Yeah, so it did mute the sell here. Typically, this would have been a sell on this candle that was right before the open. So we wouldn't have got the sell at the open. It was before the open, but it muted it because of the strength of the move up. So it's looking for support to hold here today. So let me get situated a little bit here. And this is a key area because the NASDAQ has come back into its 8 on the daily, I believe. If we go back to the NASDAQ real quick. Yeah, let me zoom in. Yeah, so they rejected the 8 is at 29 7. Well, let's get a little more. 29,760 we'll call it is the 8-day moving average, and that is they got to get back up that above that to reclaim momentum, and they will reject it very often if they're going to fail. So watch that level. That'll be an important level to watch if they can get above it, and it'll be an important level to potentially short if you want to look for a trade there. Right now, they're in between these two major moving averages. These are very important moving averages. If you don't know what they are, the 8 is your momentum line. When it is above the 21, momentum is up and it's a bull trend. When it is below the 21, momentum is down and it's a bear trend. The 21 is your trend line. As long as they're above the 21, trend remains up. If they're below the 21, trend is weakening and turning down, or is down if the red line is below. So you can just see if you go back here. As they come up, they ride the red line, they get below it, they hold the blue line, get back above it, they ride the red line. So momentum remains up. As soon as they cross down below the red line, they actually crossed down below the blue line. They back tested and failed a couple of times here. Then they chopped for a while. But in general, you can see that when the trend is strong, red line up, ride the red line. As it weakens, they come back down to the blue line. Then they back test the red line and fail if the trend's going to continue to the downside. Right now, they've back tested the red line. We'll see if they fail. That's to be determined. And failing doesn't mean they stay below it today. They could close above it today and then tomorrow do this. That's still failing. Okay, let's get this off of here for a second. that like that. Okay. That should go away. F11. Okay. So I said just to give some equilibrium to the market, there should be a little bit of selling here. Anyone who was short from yesterday is getting killed here, but in general, when the market is strongly up into the open, you're going to have some selling orders to kind of balance that out. You're seeing that now. They were at the pre-market high right before the open, so that is an important area to watch here. Okay, let's get back into the questions and such. Sorry about that. SLV is not following gold. It's confusing. What? I'm confused. SLV is absolutely following gold. I'm not sure what you mean by that. If you look at, are you just talking about for today? Because nope, they're both up almost the exact same percentage, and silver has almost the, well, that's the wrong chart to look at, but silver has almost the exact same pattern as gold. It if we go to the daily real quick, for silver, they pulled back very strongly off the top. They created structure down here and they bounced. So I guess I don't understand how silver's not following gold. It looks almost exactly the same, except silver made a lower low here. That's all. This will be interesting because while I expected some selling, the bulls really need to hold the moving averages on the 5-minute chart. Otherwise, we're very likely headed for the pre-market low. So our moving averages are, again, the 8 and the 21, the red and the blue. Those are very important numbers on every chart. And then VWAP. So if they break and start closing below 769.69, funny. I'm like a 2-year-old, well, 12-year-old more likely, but then we're very likely headed down to 767.05. But they got to get below these numbers. So early on, key test of support. Not shocking. Again, given the strong move up before the market, there's a lot of buying here. You get some equilibrium to kind of balance that out. So a little bit of selling here, of course, not unexpected. Right before the open, we were looking for that. Not a lot of selling. They don't have to come all the way back down here, but they certainly can. They certainly can. If they fail here, that could be acceleration. Again, I teach this every single time we do live trading, but I'll teach it again because it's super important. Breaking, so they did not break support here. They have not broken anything. All they did was stay up below it. Breaking is in some way accepting the path of movement. So in other words, we're coming down, so the path of movement is down. So how do they accept the path of movement? They have these two lines they got to get through. So first they got to get through them. Then they can come back above them, and if they come back down and can't make another low and come back up, then they failed here and off we go. If they come back down and they break this low, now you have something to look at and say, oh, okay, they got below it. They tried to get back above it, and not only did they come back below it, they made a new low. That tells you price wants to be going down. That is acceptance. More often than not, that will lead to a winning trade to the downside. To the upside, if you're looking for them to fail here, you want them to get down below it. And you want not on one bar. This is not a one bar thing. You want several bar or more than one bar, not several, but you need them to get below it, which they did. Then you need them to get back above it. And then at any test that comes back toward it and below it and fails and comes back to the level, that tells you the bulls want to win. Because they couldn't make a new low here. They got back up to the level they wanted to defend, and you're very likely to see them do this. Now you want to see them sweep it and then you want to see them get above it, and then you want to see another 5-minute bar come down below. So let me kind of illustrate that if I can to make that sound more understandable, because that sounded confusing to me and I know what I'm doing. So you want them to get down below it with the first bar. Create a sweep. They don't have to stay down here, just down below it. They can come all the way back up above it. This bar can do exactly what this bar is doing. So you see this red bar right now, it got below it and it's back up above it. That's perfectly fine. Then they need to get back above it. That can all happen on the same 5-minute bar. Then a new 5-minute bar needs to close back below it, but not ever take out this low. If they come back to price, that is bullish. That is very bullish. And you should expect a squeeze. Now, that squeeze doesn't go forever. It goes to the next level, and then you see. You take profit at that level, and you see what happens. So the next level would actually be the highs, I believe, because we were at the highs. There's probably some resistance over here that you could look at. And you have your most traded zone. That would be an area of interest. But the next level would be the highs. If they come back up off of that, and then you can take some profit. And what you want to look for here is you want them to get above it, come back below it, get above it, and take out this high. So it's just down in reverse, right? If they take out this high, they've accepted this level and off they go. If they do this and break this low, then that's a failure. That's how institutions trap you. They create usually they would create a very, very strong move. So it looks very scary. So very straight down move or straight up move. Then they bounce it. But you say, oh my gosh, look at all that selling. They've got to keep going down. And then they start to go back down again. They get back below the support. And you say, yes, there's the short. They trap you. And then they do this. Until they break this low, nothing good is happening to the downside. Now, that's a close below the support. They can still reclaim it, but if they continue with their down, making a new low there is good for the bears. But you want to see kind of confirmation still. You want to see them come back up to this level before you enter. You can, I mean, they can take it directly down. It can be a straight sell-off. They don't have to. So there's two. We can see this on any chart, right? There's V-shape and then there's acceptance. V-shape is also acceptance, but V-shape is spike below it, rip it. It's just gone. You just can't do nothing about it. And there's elevator down and there's acceptance, right? This level may not be something that they give a crap about, so they're just going to slice right through it and continue, and you just get no chance because it's a lockout trade. And that happens. You just miss trades sometimes because they don't give you a setup. They just run right through. So if you don't get the setup, that's okay. Just wait for the next setup. But generally, you're going to get the setup. You see them already coming back up toward the price. So here's your sweep low now, 769. If they come up and touch the 21, that will lock in that as your sweep low. Haven't quite gotten there. And when they're stacked like this is considered a shelf. You can have that in support too. Like this would be a shelf right here where you have these two levels that are basically the same low for this low that bounced. You want to get over the top side. So you want to get over VWAP to confirm. But they have now closed a bar. They came back up and back tested and made a new low. So this could accelerate to the downside. Okay, there's the full touch here. Now we've got true back test. So remember, it all doesn't happen in one bar. So now we have a low, and they're coming back up. So you're looking for the next move down below the 21 if they give you one. And then the next move down, if they break this low, that's bearish. If they come back up and break or get back to the 21, that's bullish. Are options prices highly elevated? Good question. I haven't looked at options prices. What price are we at? We are at basically 770. So $1.30 and $1.20. Basically, they're at $1.20. I would say no. They are not elevated. They are slightly higher than normal. And by slightly higher, I mean like if you went and got gas yesterday and it was 350, and then you went today and it was 355, that's slightly higher. It's certainly not inflation. It's just slightly higher. So I would say no, they're not. In general, you're looking at $1 to $1.20 or so, and they're at about $1.30, $1.25, $1.30. Just kind of depending. So I would say they're not elevated. However, one caveat I will give to that. there's always another caveat. When down moves start, they are essentially considered, depending on how they start, when they start softly like this one did, they're essentially just considered back testing the high of the last market or the last breakout. Very common bullish price action. Nothing crazy is happening here. You generally don't get volatility pricing until volatility is here. So some days they know ahead of time the orders are in before the market opens. It's ugly. Today, obviously, there were way more buy orders in than sell orders. We have buy. By the way, SMH has turned red. That is a warning sign. Keep an eye on that. It can turn back green very quickly, but it has turned red. So we'll see how they handle this break back to the upside here. This is more of a V-shaped recovery, by the way. Because what happens is they expect corrective action, and then they see bullish behavior come in on the corrective action. So there's no reason to elevate prices. And then midday, somebody drops a bomb in there. An institution comes in and says, hey, here's a million sells or whatever. And they have to jack it up real quick because price starts dropping like a rock. And they get caught off guard. And that does happen at the beginning of big downside moves where everything seems normal. And then all of a sudden the earthquake hits. So tornadoes, you kind of know they're coming because there's a thunderstorm out there. The clouds look a certain way. Everything's normal. But earthquakes, it's a nice sunny day. You're looking around and then all of a sudden everything's shaking and you're like, what the hell just happened? So they get caught off guard sometimes at the beginning of down moves because they don't have the volatility until the volatility is there. But in general, if you want to be on the right side of probability, which is where we want to be, today does not look like selling. As far as options prices go, I should say, as far as options prices go. One interesting note, and this is the overnight low, I believe, right? This is an interesting thing. This pre-market low here at 625. Well, it happened at 620, but at 625 you got the buy signal, and then the next candle gapped up quite a bit. 767 off of 767.15. This is like a 30-cent gap, 20-cent gap. All of these gaps got filled. So there's a bunch of gaps through here that got filled right here. That one does not get filled. This is an interesting development. I always look for gaps and see if they got filled. Most of them get filled, like these all got filled. So this one down here at the lows, and you can see they're selling pretty strongly here, by the way. Let's get back over here. Okay, so now they've come back below price. If they can hold this sweep low here, I suspect it's going to fail knowing that. If they can hold that sweep low, then there it is, it's failing. Then we would look for them to come back up, but they did not hold that sweep low. NVIDIA has turned red. Meta has turned, well, I think Meta was already red. It was one of the few. No, Meta was green. It's turned red. Microsoft was green. I think it's turned red. Netflix was flat. It's green. Amazon has turned red. Tesla has turned red. Watch out. Now you're seeing some options pricing go up. Some volatilities here. All right, this will be an interesting level to watch then. Down here. 767.16. So this is a failed breakout. Very, very often we know that they're going to come at least to the highest of the two lows, the after hours low and the pre-market low. They're going to come at least here in general, 767.05. And 766.69 is also a target that gets hit quite often, but the higher of the two gets hit much more often, which makes sense. First major support is going to be right here. This is 768.16. Then you're going to have some more at 767.89. Those two areas could produce a bounce. I suspect it will be a dead cat, and we'll continue down till we at least fill that gap right here. There's actually a couple of them that need. This one gets a gap. Filling a gap is odd to me, so I suspect they'll paint that one too. But well, it'll get painted anyway because it's coming. It's got to come down to here. Why did I draw these lines? What are those about? Let's get those off of here. Funny that it came to that line and failed. I don't know why. There's nothing there. Must have known my line was there. All right. Let's look at some other things. The ADD is sinking. It was starting at 1656, which is generally very bullish. It is now at 1292. NASDAQ is falling off a cliff. Come on, NASDAQ, where are you going? It's already hit its pre-market low. And its after hours low, so it fulfilled both of its targets after the failed breakout. ES is still green, NASDAQ down 0.5%. SMH accelerating to the downside now, down 1.65%. If we look at the SMH, we may have a buying opportunity coming here. We'll see. Am I on the SMH now? Oh, SMH is over here. SMH falling through, but let's go to the daily on the SMH real quick. So it had big support right here that it held yesterday. And now it's back making a new low below yesterday's low. That is a bad sign. That means they have rejected this support and they want to come down. It's a bad sign if you're long the SMH, I guess. They want to come down. Fill this gap is the next one. Actually, that gap is all the way down here. 545 is your next major area on SMH. They have a little bit of support right here. So this wick right here, this daily low that they're coming into, can provide some support. But the fact that they basically came down to this daily low yesterday and then took out yesterday's daily low tells me they're likely to take out this low. They may bounce it. Don't get me wrong. You may see a little bounce here first, but the likelihood of this failing is fairly high. So this is one of those things where it's really hard for the market to rally, even though we're at 1300 positive on the ADD and Vold is positive. You're seeing the ES is positive, but because SMH and, well, these guys have all turned green again. What a quick rally that was. What a quick reversal. NVIDIA and SMH are so weak right now that it's really hard for the market to break out. So let's make sure we didn't miss a trade down here. Sorry, guys. I'm on the. So all NASDAQ did was come to its pre-market low, and so far it has held. Now again, they swept the low. They got back above it. If they come back out and take down this low, yeah, new levels await us below. The SPY is backtesting its breakdown. So it broke down through this level here, right? And now it's backtesting that area. If they can accept that area, we'll look for highs. If they fail that area, we'll look for continuation down. It's going to depend on the NASDAQ, I think. Everything's going to hinge on what happens off this pre-market low. If they fail this pre-market low, you're likely to see selling accelerate. If they hold this pre-market low and create a squeeze, then this was just a kind of flash sell to start the day, and we'll look for a rally afterwards. But because this wasn't weak enough, you can see how weak the NQ was, but the SPY wasn't weak enough to get us through a selling cycle. This didn't get us quite deep enough to set up the buy, unfortunately. Most traded zone here on the SPY, rejecting it for now. The black line coming across that as your most traded zone for the day. It's essentially not quite the open, but just below the open. So here is an entry on the NASDAQ for a long. Your entry was 29,502.75. Your stop is 29,406.50. Your take profit one is 29,520. That stop's too wide. Anyway, your take profit one is 29,520 and your take profit two is 29,530. These are supposed to be filtered. Is the squeeze sniper on today? I'm not sure what you mean by that. We do have squeeze sniper right here, and they did just issue a trade. However, I'm unhappy with the stop on it. It's too wide. That's supposed to be filtered out because that's just not a good trade setup. Um, is the ADD line deteriorating a little bit? It's basically holding 1300. It started at 1656 and it's down about 300 off of that, but 1300 is still very bullish in general. However, again, the ADD can encompass a whole lot of little stocks like the RTY and ES stocks that aren't as important, and the SMH can literally overpower that by itself. And what I mean by that isn't just like the SMH ETF, all of the stocks that make up the SMH, the SanDisks, the Microns, the whatever. If they're having a bad day, they will eat up all of those little stocks gains. Remember, all the ADD says is the stock higher than yesterday's close? That could be a penny, that could be $10, that could be any number of things. So if you have 800 of those stocks are 0.01% above their close. I'm not saying they are. I'm just saying if they are, then then obviously that's not very powerful, but they are technically green. And if the big stocks are all 2% below their close, then they overpower all those little gains. Like, for example, Amazon and Tesla are both positive ADD, but they're not really helping a whole lot right now anyway. Meta not really helping a whole lot. Microsoft not really helping a whole lot. If it continues down, what are the next levels? For the SPY, NQ, which one? Both? ES? Which what next levels on which? So just an FYI, I'm running a new version of Sniper that we're working on. This entry is correct. That's correct in the sense of what it is, as far as a potential bullish entry. And when you have the entry, your stop has to be the lowest low of the structure. But because that's a 94 point stop, we can't um, we can't take that trade. It's just that's just 94 points is too much. So it's supposed to filter this trade out. Now I can't look at that right now because we're in the middle of live streaming. But this is supposed to filter, and it didn't. So this is not a trade. I mean that stop is insane. So we'll take a look at that one and see what's going on with that after the stream. And it may turn out to be a winning trade. That's not the point. The point is the trade setup, the construction of the trade is wrong. And you have to win this trade so many times to overcome one losing trade that it's not correctly structured. V-shaped recoveries are a thing that we get, and that's what this would be, is a V-shaped recovery off of a major low. But one, it needs to be, it's a little far away for the V shape, and two, the stop, well, just this too far away. The stop is too wide. Usual stops are like 20 to 30 points. And when you good morning, Will. Um, and then the usual wins are, like 20 to 30 points. So you're generally 1-to-1, but winning about 65% of the time. And that is perfectly fine. I guess we should have looked at the ES here. Let's see if the ES has a trade as well. Does not look like the ES produced a trade on the way down here. There. Okay, let's go back to the NQ. Okay, we do have the opportunity for Pivot Point Pro to give us a trade, though. So let me get that set up. Right now, it would be the 7. 770 strike. If they give it to us. NQ's got to find a low and rally here. Not a great sign here for the NQ to go up, create a lower high, or higher low, excuse me, but then create a lower high and then a lower low after that. So they need to hold here, and if they can take out this high, then off they go. But this is not a great look. However, they do run lots of traps where they make it feel like it's going to come down and take you out, and then they rip it back in the other direction. So we'll see if that's the case here. With SMH not recovering yet, that's essentially what we're watching is can SMH recover? SMH is going to be the key. If SMH starts to come back to green, then the market will absolutely rally here. It's carrying the weight of the market on its shoulders, if you will. NVIDIA earnings aren't until August 26th. Yeah, they're next week. Next Wednesday, actually. That'll be an interesting one. I want to see where NVIDIA is at that moment because they do have the potential to build into a new high on Nvidia. But if they're not there, well, it'll just depend on where they're at earnings. If they're down at support, we'll see if earnings can save them. But yeah, that'll be an interesting one to watch. Selling here on the NQ has weakened, and what I mean by weakened isn't that it's not continuing back down; it's just not accelerating. Um, so we'll see if the bears have some gas left in the tank. But generally, this kind of price action um, can struggle to get through. Let me see what kind of support. I know it's the pre-market low, but I need a different chart. They're below the 21. They're battling this set of lows right here, basically the bottom of that portion. So that'll be a pretty good support area to try to hold. Getting through that though, it's a big day for the NQ because closing below this makes tomorrow a pretty important day if they can close below the 21. If they close below the 21 today, that makes tomorrow fairly important because if they follow through, that tells you they've accepted the 21 as being weak and will accelerate. There is a new low on the NQ. So the trade is right but wrong, if that makes sense. It's right because this pre-market low area was the right zone, but we didn't get a true acceptance protocol off of it. So it went to what's called a V-shape recovery. And that's okay. The V-shape should have entered around here, around 2642 or so. It entered a little high, so I need to see one, why it entered high, and two, why it didn't filter out the stop because the level selection is correct. The pre-market low is a correct level to select, and we got the bounce off of it, but we didn't get the protocol that you're supposed to get here, and trading up here is just bad. So this trade here is one that should have been filtered out because of the wide stop and just the overall setup of it. And maybe that's because, let me go see something real quick. No, it was on that one too. Okay. Looking for another 150 down on the NQ? Very possible. SMH is losing ground. It's now down 2%. Nvidia's down 1%. Those two are, they might as well be hanging a giant weight on the market, running in a weight vest. We are still, the ADD is declining again. Now it's down to 1175, so it's down to about another 150, 200 points, which makes sense with the declining markets. Even when people run to stocks that are good, for instance, RTY stocks and ES stocks that they like, that aren't part of the AI trade, they all start to worry when the AI trade is going poorly. So people will start to sell those too, which is why you're seeing the ADD drop, because you're seeing people just get rid of those things. We are approaching a big number down here, the monthly low for August. Oh, did they just make this? Hold on. Today's low. I think it's the monthly low too. Is that what's overlapping? Hard, they're overlapping. Or the weekly. I think it's the weekly low. Let me see here if the monthly low is monthly average is there. So if only there was a way to see that. Oh, there is. Just go to the monthly chart, genius. No, the monthly low is much lower. 28,312. Okay, so that's not the monthly low, but this monthly candle's starting to look ugly. If this monthly candle turns red, that could be a uh, that could be a problem. The monthly 21 is at 28,165. They sliced through it last month. Coming back down to it would be ugly. That would not be a good sign. All right, let's see here. Looking for a buy. Still have 770 as the strike. I don't think we're going to see a major sell off today. Options prices haven't really picked up too much. We could see the SPY come down and fill its pre-market low, but I don't think we're going to see an evisceration. Maybe on the NQ because of the SMH, but I don't think you're going to see a huge amount of drop today. You know, you're getting minus a 0.5% on the NQ right now with a rebound. But like the 770 call is only 80 cents right now, 84 cents now. Back to the most traded zone again on the SPY. This is the every single candle has touched it, so that tells you it's pretty important to the market. Well, if the next bar is bullish, I would look for a buy signal on the SPY. And there's your buy warning. How did I know? Well, that was quick. NQ got a trade and a win, so there's that. um, waiting on the NQ on Pivot Point Pro. It needs to give us the go ahead. Well, now both of them. ES has backed off of it a little bit. Thirty-year and 10-year are down today. Yeah, they've been ripping. I mean, they were up over five. Well, the 30-year was up over 5.3 yesterday, breaking out. So to see it pull back a little bit is certainly not overly shocking. Um, but they're still very elevated. What is this line? Okay, that's what I thought. Okay. So you can see how important the 8 and the 21 are even on the 1 minute chart. The 1 minute is riding the 8 all the way down, comes back up to test the trend at the 21, fails there, gets back below the 8, tests the 21, back below the 8, fails the 8, fails the 8, fails the 8, and so on. Those moving averages are really important levels to understand. Morning, Jacob. Morning, West Texas Chimney 4780. How do you put trading zones on the side of your trading view chart? You're going to have to be more specific. Are you talking about these numbers over here, like today's high, today's open, yesterday's high? Is that what you mean? We trend down then. That's on the 5 minute chart. So remember this is the 1 minute chart. On the 5 minute charts where you look for trend days. And we made, let me see where the pre-market low was. I think pre-market low after hours. Yeah, so pre-market low, back test, lower low. It should be a trend day down on the NQ. However, one caveat to that. The SPY and the ES are not on board. So if they're not on board, it can be less likely that the trend follows through. You want both charts to be trending down or up when this happens. Doesn't mean they won't trend or that they can't catch up over here. It just means that you're fighting a slightly uphill battle to continue the trend down if ES isn't on board with the trend. Always look at contextual evidence when you're thinking about a trade or you're thinking about the market. Don't just, I mean, every chart on its own. Always look at each chart on its own. However, ES and NQ are very intertwined in the heaviest way, meaning the heaviest NQ stocks, the Mag 7, some of the SMH, all overlap on the ES. And that means when those stocks are having a bad day, it weighs down both charts, or a good day, it lifts both charts. So if NQ is showing a lot of weakness because of one sector, but ES is showing strength because of all the other sectors, then you're not in unison and you're kind of fighting an uphill battle of getting everything to flow in the same direction. It doesn't mean they can't or won't. It just means it's a little bit less likely for it to happen. It's still likely that the NQ is going to have a rough day. It just really depends on which chart wins moving forward. In other words, do the SMH stocks continue down and it weighs down the rest of the market and people start moving out of ES and RTY stocks? Or do the SMH stocks find a low and start to rally a little bit and the ES and SPY do well and the NQ recovers? It's just so if you're not all swimming in the same direction, it can be challenging. I want to see the NQ and ES going in the same direction generally. When they're not, that is it's actually a warning to the downside, especially when NQ is leading to the downside. If you have one red and one green, very often the next day turns out to be a red day. The colored horizontal bars that are hidden now. Did I hide? I don't remember hiding them. I wonder if it was on a different chart. Were you looking over here maybe? No, maybe this one. No. Oh, are you talking about Mentor Q? I might have that turned off right now. No, it's on. Are you talking about those? Like where are they? Let me do something real quick. Shoot, do we have a buy? Dang it, guys, we got a buy. Okay, sorry. Let me get in here. Got in at 108 at 770, and my stop is going to be 769.30. Sorry, 35. 769.35 is my stop. Are you talking about these bars, the HVLs and the one-day min-max, put support, etc., etc.? Oh, the volume profile. Okay, if you're talking about the volume profile, then that is AAVP. It is an indicator I use. Auto anchored volume profile. It anchors to the day and gives you the volume of the day and tells you what levels are important for that chart. Back to the 1 minute here. All right. Let's see if we can break the Wednesday curse here. Okay, we hit both take profits and got stopped here for a 20-point win on the NASDAQ. Just got to clear all the sludge here. You got all of these wicks right here that have basically created this resistance zone. If they can get through that, they should at least come up and test 770.62 and then 770.89 and then the highs. Kind of an interesting day. Market's very much out of sync. All right, we're going to move our stop up 25 cents, so that makes it 769.60. And we're going to go ahead and take our profit here at $1.29. And move our stops to 108. So we're going to take half off at $1.29. We moved our stop to 108. So we have a guaranteed winner. And now we're letting the rest run. And again, you may say, well, that was only 21 cents. And I would say, well, I'm trading 50 contracts, so that's $1,000. Remember, it doesn't take a lot to make a lot. Everybody wants to make double their income in the same day. And without realizing that if you can make $400 a day, that's $2,000 a week. That's $100,000. Well, depending on how many contracts you're trading, I get it. If you can only trade one or two contracts because that's what you can afford, that's okay. You just build up to it, right? You practice a winning strategy, and if you do that for a year, we doubled our bankroll in a year, a little over a year, using the strategy I use. So then we were able to double our contracts. We were trading 25, now we're trading 50. So if you were trading 2 and you do it correctly and you follow the strategy, the next year you're trading 4. And then in 3 years, you're starting to trade enough that you're making a pretty substantial amount of money. Do you get raises at your job every 3 years? The answer to that is every year for 3 years? No. And you're probably going to make more on those with that trading, if you use the right methodology, then you would get in a raise at your job or anything else. And people just poo poo that and act like it's not money. It's absolute money, and it's a lot of money. It's how I built up everything, was a combination of buy and hold things that were in great spots, and day trading in a way that is um, day trading in a way that is profitable. People act like 3 years is a long time, or 4 years, even 5 years is a long time. You have a 30-year mortgage, so if in 5 years you've added a new 100K of income because you built up trading the right way, that's really awesome. You know, you can do a lot with an extra 100K. All right, let's see if we get a little rally here and break. We may get a pretty nice run up here if NQ can start to fire, because SMH is rebounding a little bit. NVIDIA is rebounding a little bit. So, like I said, when you have only one or two stocks or one or two groups bringing the market down, if that group starts to rally, you already have the whole rest of the market rallying around it, so it can change the market really quickly. All right, I'm gonna close another half of remaining for a buck 50 here. I think they can absolutely continue, but this is coming into a um, decent resistance area, and we don't want to just have a 10-cent winner where we can have a much bigger guaranteed winner. So we're going to go ahead and do that. Close another half of remaining for 150. Do I feel Apple's short-term decline is over? No. Well, I don't. I mean, not necessarily. No, they're up a little bit today. I'll have to look at their chart, later today. But a bounce off of the support level they were on is very, very normal. Our next place to take profit is going to be up at 771.80. We'll take another little bit off there. We're going to move our stops to $1.20. And I know there's going to be a faction of you out there that say, why did you take any off? You could have had all this extra money. Maybe. But if you don't have a plan, maybe you're going to let it run to the highs. But if they start declining right now, if the next bar starts going down, at what point do you take profit? Because now you're like, well, it's going to go to the highs. Is it? And then you get down to where you're overall win is gone, and you're like, well, it'll hold the lows down here, and then it just does this, and you're gone, and you turned a really nice winning trade into a losing trade. So are there strategies where we're looking for this up here and we're willing to take, 1 to 2 wins against 3 to 4 losses and still make money? Yes. If you have that strategy, there is nothing wrong with that strategy if that's how you're doing it. If you're just saying, I want to make more money, so I want to keep it running, that's not a strategy. That is a hope. That is a guess. I have specific levels that I watch. We take half at 20%. This was the next key level right here. Because this is what produced the biggest sell, this lower high. So if they were going to fail, this was a likely spot. The next key level is obviously the highs. We'll take some off there, and then we'll just let it run after that. David Frost said something that, God rest, I like that guy a lot, and his son's doing a great job of trying to keep that channel going, but it's just not the same. David had always said, and I really appreciated it because it was kind of my trading style too, base hits get you in the Hall of Fame. If Pete Rose didn't gamble on baseball, he's widely considered one of the best baseball players of all time because of his ability to do so many things, but also because he has the most hits of all time. And most of them were singles. He wasn't a home run hitter. He wasn't a big flashy guy. And he's widely considered one of the best. Making money, and Jim Cramer, as much as people want to beat him up, will always tell you that you can't go broke taking profit. So while I don't want you to knit, I don't want you to say, oh, I made 5 cents, I'm out. You need to have targets. You need to have a structured system that you use and then follow that system. Don't get in and say, okay, I'm supposed to take some off at 20%, but we're at like 13% and I'm happy with that. No. Hit the 20% and get out, or don't trade it, because when you get out at 13%, all of your losses now are way bigger than you imagine them to be, because your whole system has to be set up on your risk reward ratios and your win percentage. And if you're not hitting your risk reward ratios because you knit out at 13% and don't let it hit its full value at whatever target you have, then you're always going to let your stop hit because you want the trade to keep going. So you always hit full stop, but you're never hitting full price at the top. And that is a very tough place to be because you're going to lose. So whatever your strategy is fine. I don't care if you go for big wins or smaller wins, as long as the risk reward and win percentage vet it out where you are going to come out on the higher end of probability. You don't have to have a winning trade percentage to be a winning trader. If you are winning 3 out of 4 trades, which is really hard to do, but if you're doing that, you only got to be, and you're getting, I'm sorry, if you're only winning 1 out of 4 trades, which is easier to do, and you're getting 3 to 1 on your money, then you only got to be right 1 time to break even. So you got to hit over 25% to break even. Because on that 1 win, you're getting 3 times your loss, which means you counter the other 3 losses. So a 25% winning percentage breaks even if you're getting 3 to 1 on every win. But you got to hit the 3 to 1 on every win. If you're only getting 2 to 1 on every win, then that doesn't work because you cheat yourself. So whatever your strategy is, that's good. As long as the math works and you run it. Don't get out before the targets. There are a very few exceptions where I will take an early dismissal. And that is, let's say we are at, let me just look at a place here that makes sense. We are at the pre-market low, or just above the pre-market low. We're right here, and for some reason we get a short. And we enter that short, and we hit the pre-market low, and I'm at like 18%. This is such a dangerous place to be short heading into it because you're very likely to get this. I will take the 18% because the risk there is very high that I'm going to get stopped out. So if I try to hold for the extra 2%, which means it's got to get below the pre-market low far enough to fulfill my trade. So there are times where you can do it, but I see people do it all the time where they're like, oh, I was out, 10 cents ago or 2 bars ago. And I'm like, why? You're cheating yourself, and you're going to lose money overall doing that. Is the curse over? I hope. The one trade on NQ I wouldn't have taken. Nobody should. I hope you guys didn't take it. I'm sorry that it came up. It's supposed to be filtered out. I'm running a new beta on it, and it's obviously it didn't filter out that trade. I would never have a 94-point stop. That's insanity for a 20-point win. That means you got to win like 8 out of 10 times, 9 out of 10 times. Anyway, but the other NQ trade hit both targets, so that was good. And this trade's a winner and moving up, so that's good. Yeah, maybe the curse is broken. Maybe, the Red Sox finally won the World Series. Here we go. Ever since we traded the Bambino. I'm not a Red Sox fan. That's just one of the curses I know. It could just be a witch doctor in some closet with a voodoo doll of me. And every Wednesday he just goes in and sticks it with knives. All right, NQ's flagging on the 1-minute chart, so that's not a huge deal, but it is a flag regardless. So we'll see if they can hold the most traded zone and go. And if they can do that, we could see the next leg up here into the highs. And that'll be 771.81. Starting tomorrow with Big Red. I assume you mean down. That's a very dangerous view to have at this particular moment. The reason being, if you look at the daily chart, all the ES did was backtest the prior high and then accelerate off of it. That is very bullish behavior in general. If they fail back below 7,700, then yes, I would say Big Red. If they accelerate towards 7,800, then look out above. So tomorrow is a pivotal day for sure. I wouldn't be either long or short because you're in the middle. I want to be long at 7,700. I want to be short at 7,800 if I get setups. But I don't want to be in the middle here at 7,750 trying to pick a side because I don't know. Sorry, let me re-explain that. I wanted to be long at 7,700 today if I was going to be long because that's where they should have backtested and held. And then if they're going to short, the 7,750 to 7,800 area, if I get the right rejection off of that zone, then yes, that's an area that I would want to be short from. If they come back down to 7,700, I don't necessarily want to be long again. That could be an absolute breakdown problem. Trade the edges. That is a trading system that, regardless of what you do, should make you money. Right? Trading the edges. Trading the edges means find the range, understand where the range is, and then look for setups off the top and bottom of that range to short and or long. So we're going to move our stops up to 130 here, by the way. So if you look, where are the edges? Well, the edge is here. Now they're coming into the edge from above, so you want to trade the edge long. If they do this, you want to trade the edge short. When they come in here, here's the bottom of the range that they set back in June. When they came back down here in July, if you traded the edge long, you made a lot of money. Find the edges of the market and trade them. And first time is always the best time. They made this low. The very first time they came into this low, they rallied all the way to new highs. Right? Always the first time is the best time to look for potential rejection or bounces, because that's when the supply or demand is still the highest. Now see, here's a case where If you were holding for the pre-market high, at what point do you say enough is enough if you don't have a plan? If your plan is, I just hold for the pre-market high and I'm okay with losing this trade, no problem. I get that. I understand that whole system. But if you're just saying, I want to let it keep running, now you get into an emotional battle with yourself of, God, I had $1.80 up here. Now we're down to $1.50. How far do I let it go? I've already given back 30 cents, but it should hold. It'll hold the 8 down here. At the worst case scenario, it'll hold down here and then go higher. Well, maybe. And then you get into an emotional battle if it doesn't hold the 8. Okay, we're back to break even, but we're only at break even. We haven't lost any money yet. We've got the most traded zone right below us. It'll definitely hold there. Have you had these conversations with yourself? I bet you have. I have. I have them all the time. I used to have them all the time. I don't anymore because I have a trading plan. But before I knew what a trading plan was, how to have a trading plan, and how to trade, I had those conversations all the time. All right, it's going to hold this support. Nope. This one? No. You just had $10,000. Now you got no $1,000. That's how you blow up accounts. I've blown up a few in my life. And if you take them as learning opportunities, it's okay. You can always make more money. You can always figure it out. But if you keep repeating the same exact mistake over and over and over and over again, you're kind of doomed to what you get. Based on options pricing, we are well below the week mins on SPY and QQQ. I'm going to take your word for that. I don't have that handy. I do. It's the Mentor Q stuff, but I don't. Are we below the weekly minimum? I don't know. I have to look. Um, I would say 765. I mean, 764 are both the minimum. I mean, this is the daily minimum just for today, 764. But the put support's down here at 764. So I would not think we're below that. I mean, maybe I'm wrong. I don't know. I don't use it for the weekly, so I don't. I don't know. I'm not gonna. Like I said, I'm not afraid to say I don't know. So I'm gonna say I don't know. But based on what I see here, we're well below the call resistance, which is 775, but we're also well above the put support, which is 765. All the zero DTE stuff is about today, but the put support and put support zero DTE is down here at 765. And see, here's where it gets real dangerous now because what happens is you say it's going to hold the 8, and then you see this bar right here, and you go, okay, whew, we're good. We're good. And then before you know it, now you've talked yourself into they're going to hold, we're going higher. And they might. I mean, that might be the case. But when it's not the case, that's when you fail to get out because your emotions really start to mess with you then. Then you really start to beat yourself up over the fact that you had money you gave away, that you were wrong about it holding, that it's probably going to hold later to make you feel better. You really get yourself into a vicious cycle of uh, emotional sabotage where you take trades that should have been incredible and turn them into losers somehow. And I I've made some trades like that I am not proud of. I am not proud of. I had an option trade one day. This is not a lie. And a long time ago, I was around 2000, what, 7, 8, somewhere around there. Maybe a little before that. It was before the great financial crisis for sure. Anyway, about 20 years ago. And I was very positive we were going to squeeze. And so I put my whole account into 200 options contracts. And we squeezed. And I was up $65,000 in 10 minutes maybe. And I was so sure I was going to make $100,000 that I let that $65,000 go to negative $10,000. And it was the sickest day of my life. Because at that time, I didn't have a ton of money. I had money, I had a job, I had things that I could do, but that was $65,000 was a ton of money at that time that would have, paid off my car, paid off everything I had. I didn't have a house or anything, so I didn't have like a mortgage. It would have made my life so simple, and then poof, it was gone because I was so sure. I just wanted to say I had $100,000 trade. I was so confident, and it was so sick. I was sick for a week about that. It's a weird thing, money. When you don't have a lot of it, and you see, at that time, 65,000 was a lot for me, and you see 65,000 on the screen, and I think it was like 10 or 15 minutes, like 3 bars, 4 bars. I mean, it was one of them epic squeezes, and those epic squeezes can often end in a firework display, and where it poofs at the top and then all falls down, and that's what happened. When it just pops on the screen, you have $65,000 and you had about $5,000 or $6,000 in there to start with. That is pretty intoxicating. And then when it's gone, that is that is something. Yikes, young Jacob trading mistake storytelling. Yeah, I mean, right now we're just printing money. So, by the way, we're going to move our stops up to 160. And we are going to close another half of remaining at 210. And now we're just going to let it run until we stop out. We'll keep moving our stops up with price. Hopefully they don't reject too strongly here. NQ has turned green, by the way. SMH, I'm assuming. SMH has rebounded pretty nicely. And we'll just hope they don't reject the top here and we can run it out. This is a big rejection area. It's the call wall. So they're going to want to defend here. They defended it in the pre-market. They're probably going to defend it here. So we took some off. And I always take it off right before because they don't, like down here, they don't have to come all the way down to the area that you expect them to. They can absolutely stop short of the blue line. This was the blue line here. They came almost to it, and then you never got a chance to get out. So I always take it a little bit before wherever I'm thinking the big resistance or support is, because they can do this to you. If they go hit the number, great. It's a few pennies. It isn't going to cost you that much money to do that. And you guarantee yourself the win instead of getting smoked like that. The psychology of money is right. Yep, they are. It is it's funny because poker really changed my trading life in an odd way. I was playing poker for a long time when I really got serious about it and played a lot more and started making money, grinding cash games and stuff. In order to be successful at poker, you have to disassociate yourself from the chips being money. In other words, you have to play at a level that you can afford because you have to be aggressive and you have to be able to bluff big stacks of chips and not say, oh my God, if I get called here, I'm screwed. You have to be able to play correctly. And that disassociation of the money was what allowed me to realize I needed to adjust my trading mentality of I can beat the game. There's no, I got aces essentially. I can get it all in here and I'm never going to lose. When you lose quite, a fair, depending on the other hand, an amount, you lose an amount with aces. And studying poker and learning that if I wanted to keep playing poker, I had to bankroll a certain amount of money so that I could withstand losses, uh, allowed me to associate that to trading and say, hey, you can't put all your money in on one trade because it's just like having aces. You think you're right, and maybe you are, but you have to be able to withstand 5 cards. And that's kind of when all of my trading changed. That, and then I started studying Elliott wave theory because I was very much into the science of the market and the science of poker and the math of both. Kind of a nerd that way, and that was a lot of fun for me to figure all that out. But that was one of the things that changed my overall mentality. We're going to move our stops to $2. In 2000, I put my life savings in tech stocks. 60K turned into 15K. Yeah, 2000, that crunched a lot of people pretty badly. They I think there's another 2000 coming, but that was a nasty one. 2000, 2008, those two were really nasty. Well, maybe it's making that big M top. Thanks for the analysis, Jacob. You're welcome. And if you mean on the SPY right now, they kind of blown through that, but potentially they could, give you a higher high failure up here, failed breakout. But they're through the pre-market high here, so we have a potential for them to trend the rest of the day. Nasdaq's got a long way to go for that, but it's trying to catch up. And if SMH can turn green, you have a pretty green board then, and that would be a strong indication of rally. Move my stops up to 220. And now our stops are over 100% of our buy-in, so that's always nice. ES is deep in a buy cycle. NQ still not flipped into a buy cycle yet. It was so far down that it had a long way to go. So it's almost there. It's very close. And usually that's the time you start looking for the market to potentially pull back or reverse. Don't we have the Fed meeting minutes at 1 p.m. today? We do. That's really the big news of the week. Honestly, there's not much this week. That's probably the biggest catalyst. I'm wondering if the Fed minutes are now important again because before Powell, who was before Powell? Was it the lady? What was her stupid name? I hated her. I hated her worse than I hated Powell. She still says dumb things on TV that drive me nuts. I think she was before Powell. I could be wrong about that. Anyway, before Powell, the minutes were important, and then during Powell again, you already knew everything he was saying. He was so transparent, which the market really liked. Yellen, yeah, Yellen. Anyway, the minutes could be big again. They used because the entire Powell era minutes were kind of a non-factor because he was so transparent. Everybody kind of just knew what they were going to say. And sometimes you knew what they were going to say and they still moved the market because it really doesn't matter what they say. They already had a press conference about this. They already asked him 700 questions. They already raised the rates or didn't raise the rates. I mean, they did whatever they were going to do, and now we're just reading about what they already did. So I don't understand why they care, honestly. But they usually say, "Oh, the market went down 20 points because he said in here that they could raise rates at some point." Okay, that's why it went down. All right. Anyway, but they could be back to being a big catalyst again because they are a little bit. They might be a little bit more surprising. I don't know. They rotate around what they make their big catalyst. For a while it was CPI. CPI moved the market hundreds of points. And then for a while it was the Fed. Then Fed minutes. Sometimes it's jobs. Sometimes it just kind of depends. So we'll see if Fed minutes are a thing again or not. Well, he doesn't give a lot away, and so he said this guy doesn't give a lot away, so it's important now. He doesn't give a lot away, and he's kind of smug about it. So they really hate that. Kind of makes me laugh. I don't know if I like or don't like the guy. It doesn't matter right now. He's only had one meeting, but I do like when they talk to the press a little bit smugly because the press they just ask questions that I just don't understand some of the questions they ask. So I was kind of I don't know what this guy's supposed to do. They sat in a room, they decided what they decided. Even with Powell, I don't like Powell, but they decided what they decided, and here's the rates. And then you're going to ask the same question 72 different ways. I just it's fascinating to me. Reporters and stuff. I don't know. Sporting event reporters and news reporters just ask the dumbest questions, and I don't know. I'm not a big fan of it. The press conferences, but I'm not a big fan of the media in general. All right, let's see if we found a top here. That's a potential topping candle on the 5 minute. You need follow through and other stuff. One candle doesn't make a top by any stretch, or a reversal candle, not a topping candle. It could be a topping candle, but you do have a doji up there that could give us a retrace back to the 8, which would stop us out. VIX has dropped a lot. Yeah, I mean we've gone up. I mean we've turned the NQ green and ES is green, so it makes sense that the VIX is not. There's no volatility. The options pricing at the beginning of the day, there was no volatility priced into the market. They were 80 cents, and they went up a little bit as the NQ came down, but in general, there was no volatility priced into the market today. Which is evident by price. Options pricing is one of the biggest keys you can have. It doesn't tell you when the selling is going to happen in that day. It could happen in the afternoon. It could happen in the morning. It could, happen in the pre-market and continue. There's a lot of ways they can sell, but when options are elevated, there's going to be a selling event that day. It doesn't have to be a continued selling event, but there's going to be a 20, 30, 40, 50 point sell during that day sometime. 20 is pretty normal. You're going to get a 10, 15, 20 point drop on most days. The question is, after that, do they continue or do they rebound it or hold the pre-market low? And the biggest thing is, do they hold the pre-market low? And while they swept it quickly on NQ, they got back above it pretty quickly as well. And ES never got close to it. So that was a tell that they were not likely to be overly aggressive selling. Now, remember, from here, we stopped out, by the way, on our trade. 220, I'll give you the numbers here in a second. Remember that they could still sell from 772 all the way back to 769. That's a 30 point sell. 3 points on the SPY, about 30 on the ES, and have done really nothing during the day. Still be slightly green, I believe. And had nice movements to trade. So it doesn't mean that the selling's over. It means that we're not going to get a big red bar that wipes out daily lows and kills the market and does that kind of stuff. All right, so we stopped out at 220. Okay, we stopped out at 220, and our average exit was 156. Nice day. Nice day. All right, guys, it is 11:11. Perfect time. Look at that. Somebody make a wish. It is 11:11. I got a call at noon with my group. If you want to be part of that call or part of these trades every day, check out investwithjacob.com. Love to have you. Squeeze Sniper over here is available in the link in the description. Should have an update out. I wanted to have it out over the weekend, but then I realized I needed to see trades, and now I realized we have a filter not working, so I got to get that filter fixed. That shouldn't be a big deal. It's just a line of code that didn't go through, a couple lines of code. So should have a new version of that out before next week's trading for sure, but hopefully in the next day or so on that. And we will be here for the close at 3:55, so check us out there. I appreciate all you guys being there. If you got something out of this or made some money today, hit like, share this video, subscribe to the channel so you don't miss it. Appreciate you guys. Have a wonderful rest of your day or week if you're only here for the weeklies. I appreciate it. Have a great weekend, all that good stuff. We'll be back later on today.